Right on and address the banking space. Union Bank of India is an earnings candidate. Let's touch base with the management. Rajkiran Rai ji, the MD and CEO of the bank, joins us now to chat with what transpired in the quarter gone by. Mr. Rai, the slippages have come down substantially on a sequential basis. It still remains, however, fairly high. Also, recoveries have improved. Could you explain to us about the movement in the gross NPAs in the quarter gone by?
During the quarter, actually, we had 4,600 crores of slippages. Out of that, nearly 900 crores has come from existing NPAs where the non-fund based facilities like LC, ABGs get converted to fund based. And there was one major account of 1,200 crores slipping during this quarter, even though it is from the stressed book what we announced in the March quarter. So going ahead, actually, we feel that the corporate slippages will substantially come down. It has already come down and it will substantially come down. And we need to manage our MSME and retail portfolios well now so that we maintain very low slippage in the coming quarters. And I am foreseeing that our recovery and upgradation in the coming quarters will be higher than the slippages. That is our expectation now.
Mr. Rai, overall, the NPA stress remains fairly high. So, could you tell us what is the kind of normalized slippages as well as recoveries that one can expect in the next 3 quarters of this fiscal?
The recoveries for the next 3 quarters, we expect about 7,000 crores, out of which about 3,600 crores coming from NCLT resolutions. And the slippage, actually, we have projected delinquency at 3.5. So, out of that, and we had already projected that the H1 will be slightly higher. Among even within H1, the Q1 was very high. So, I think going ahead, we will have much lesser numbers.
Hi, this is Nayantara joining in from the New Delhi studio. Thanks so much for joining us here on ET Now. Can you throw some more color on asset quality and the details? What kind of slippages are you expecting from the watch list? Which are the sectors that are under far more stress? For example, we hear so much about power. What's your exposure to the power sector?
Yeah, from the corporate book in SMA2, we have only 1,500 crores under watch list. In March, we had 1,700 crores and all of that slipped during this quarter. So, we have a watch list of 1,500 crores which may slip in the next 2 quarters. So, that's about the corporate possible NPAs. And if you are looking sectors, let me touch about the NCLT cases. So, both the lists put together, right now our exposure is about 10,500 crores and we have a provisioning cover of 65%. And the second list, our provision cover has reached 69%. So, we feel that we have sufficiently covered ourselves for the possible resolutions in the NCLT. When it comes to power sector, thermal power, we have exposure of about 12,500 crores. Out of that, 6,000 crores has already slipped into NPA. And 6,500 crores, we have checked every account. These accounts, we don't see any probable slippages during this year. So, these NPAs of 6,000 crores, what we have in the thermal. So, out of that, few accounts are already in NCLT. Few accounts will be hitting NCLT by this month end or September. And under Samadhan scheme, we at least can see resolution of at least 2,000 crores worth of NPAs out of this book. That is our estimate.
But there has definitely been improvement in the credit book, especially when I look at the domestic segment of the book. So give us an update on an outlook on the advances and the deposit book for the rest of the financial year.
Yeah, deposit growth, we have projected a growth of 8 to 10% and advances growth of 7 to 8%. When it comes to advances, this time also we had a growth of close to 8% on the overall book. But if you look at only domestic credit, the growth was more than 12%. So the growth is there, but then we are very selective and we are following a capital light model. So we are steadily growing, but very choosy about the corporate credit we are picking.
Could you also give us an understanding of your capital needs in the current fiscal, and given that your NPAs are already so large, do you think you can raise any capital from the market at this point, or would you have to rely completely on government infusion itself?
Actually, our dependence will be on the government to start with. We have already our capital requirements are already on the public domain. We have announced that we have 7,000 plus crores of capital requirement for the year, which board has approved, and we have put our request to the government also on this. So hopefully we expect this capital to come in maybe by third quarter. And if there is a if you are able to maintain this consistent performance for the second and third quarter, probably we'll be able to raise some capital in the fourth quarter. That is what we are planning.
All right, Mr. Rai, great chatting with you and getting a sense of what the bank is planning in the coming quarters for the rest of the fiscal. Decent numbers posted by Union Bank in the quarter gone by. The stock also up 2%. In fact, I'd like to tell our viewers it was at 1.8%, moved up another 0.2% while the management was conversing with us.